Hey, Dave Knight here at 123daytrade.com. Thanks for watching. Thanks for being here. Today is June 1st, Friday, June 1st, 2018. Welcome to the month of June. It seems like just yesterday, the last time that we had a J for a month was January. Yeah, I had to think about that for a second. June, July, right? So, welcome to the kids. My kids got done with school yesterday. This week was I don't know. Every so often I think that I know something, and then I am humbled in the process along the way. So it was a challenging week, and it was an interesting week. Friday of last week, the market decided to fall $3, and I took last Friday off, and I think I've been behind the 8 ball most of that time. I did get the 50K account up to over 1,000, and then I got tired of waiting around. I shouldn't say tired. It's just I am not the best trader when it comes to leverage right now, and I've got to learn, I suppose, how to handle increased leverage. I did okay with the 50K as an overall, but I feel more comfortable at 30K. So I decided to withdraw the 50K account. I know you're thinking, man, what the hell are you doing now? And that's how I feel like right now. I'm a much better trader if I limit myself to a $500 loss day as opposed to a $1,000 loss day, and only having 2 contracts maximum, or in this case, 1 contract most of the time that I'm taking on a trade instead of 2. So I physically work better in that scenario. Now, obviously, you may or may not work. In other words, you probably have a lot better control over your account than I do. Right now, I see signals. I see things that may or may not work, and then I end up taking them. And so, long story short, what. Last time I'm going to read my notes today because maybe this will help logic and thinking here. Friday, June 1st, 2018, crude oil day trading. And the first note I wrote to myself today: be in control, be smart, stop blaming anyone and everyone but yourself for your bad trading recently. And I wrote, God is good, I am bad. The more I see this is better, I'll be as a better. The more I see this, the better I will be as a trader. Zones of control are important and will keep me out of non-trending zones if I use them correctly. Use volume for confirmation of a potential move with momentum. So, what I'm noticing, most of my bad trading comes if I jump into the market lots of times, feeling like I miss something along the way, like especially when I first turn on the computer. It's that, and I don't know if you get this feeling, but I get this antsy feeling like I miss something sometimes, especially if the overnights have shown a momentum driven move. It's like, oh my goodness, what am I do now? And that used to not be the case for a long time, but here in the last year or two, you really see the European markets and the overnights making, at least the overnights, as I call overnights for me, it's the overnight because it's nighttime or early morning, however you want to look at it, in the United States. And yeah, it's finally come to the point that I understand the United States isn't the central of the world anymore, and especially the center of trading. There's a lot of times where the European market makes a lot more sense to start trading than it is the U.S. market as it relates to crude oil. I mean, there's lots of time where you come in on a day and you turn, at least in the United States, you're turning on the computer and it's like, wow, the market's already down $1, and you're thinking, what the hell? What did I just miss? And so I know that personally, I have just rolled over and said, you know what? Why even get out of bed right now? And it's a better thing sometimes in a way to take that approach, because if it's already moved, most likely coming into a morning session, you're going to be grinding it out. And what I've noticed is, as it relates to my trading, is that if I wait sometimes until 10:30 or 11 my time, some of that momentum and steam kind of peters its way out, and then there's maybe a trade in the afternoon. So that's kind of helped a little bit. If I decide that I'm not going to get up at 3 and 4 in the morning my time to trade the European Open, I mean, I'm at that point in my life. I still want my sleep. If I was a younger man, didn't have a family, I would most likely I would rearrange my sleeping schedule to coincide pretty much as a graveyard shift. I think that it makes a lot of sense maybe to start thinking that if you are day trading crude oil, that maybe you need to start your day about 2 to 3 a.m. Eastern time, and then trading up to the close of the market in the U.S. around 1:30 at Central Time, 2:30 Eastern, I should say. So a lot of the movement. So if you're looking at a 12-hour trading day, 2 to 2 is kind of the or 1 to 1 if you're looking at Central. Could be, but you could get away with trading 3:30 to 4:30 my time Eastern, 3:30 Central. You'd be able to use that, or the European market and the European Open could be a good. Now, if you don't want to do all that stuff, then if you sit back and say, all right, I'm going to wait until a certain time, then it comes down to what you're comfortable with getting up, right? So your day starts when you decide what that time is. Now, a lot of times, as far as Central Time, I'm looking at the 8 o'clock, 9 o'clock my time. And when school was in session, I was looking at 6:30, 7:30, 8. So in front of it. So there's been some days that you could trade as early as 7 o'clock my time or 6 o'clock Central a.m. But there's a lot of, what I'm going to get at is there's still a lot of movement in the market in the United States time. You just have to recognize that the market may have already moved prior to you trading. And if it has, then you have to take that into account into your trading. And that's the struggle as a trader right now. If you're looking at day trading as a livelihood, as a way and a means to make an end, that you have to adjust your expectations to, especially in the United States, you got to adjust your expectations downward somewhat to accommodate the time zone differences and the market. That if OPEC starts talking, OPEC talks in Saudi Arabia time, that's 6-7 hours in front of us right now. So so if the market's tanking $2-3 in front of, so that day I think the market was down $2 before you could get, for the United States could get, well, no, it shouldn't, could get involved. That's not true. If you're up and awake, then yeah, you could have taken advantage of a whole $3,000 move, $3 down. But even in the United States, that Friday was still worth $1. So 2/3 of the move had already happened, but there still was a third left in it. And like today, if you look at today, this Friday, it yo-yoed around around the 66.50, 66.70 level for a long time today until it finally broke down and got down to where is it trading as we're closing out the day, around the 65.60 mark. So it did fall $1 today. It just, you had to be a lot more patient with your trading. I ended up with I think 21 ticks overall on my trading session. My last trade was at 66.73. And it was a really nice trade. I thought we were going to break down, and it did break, and it came back up to 71 and knocked me out. So sometimes I get too close to the market, but then on a Friday I don't want to turn a winner into a loser. But most likely, if I would have held that trade, it probably would have been, I probably would have only, that trade would have probably been around a 66.45 to 66.50 mark an exit on that trade because I didn't. The market kept, I guess, in the long way. If you look at it, the market is doing lots of backfilling, and it's today was not a very momentum-driven day. Every time it would start moving down, it would come back up. Every time it started, and it was like yesterday on Thursday. It was there was momentum prior to the release, and then there was momentum after the release. I mean, there was 80 tick moves in 2 sessions during that day before the inventory came out and after the inventory came out. There was some really nice moves in the market yesterday. So it every so often you just got to say that you're just not. I feel the last few months have been some of the most struggle that I've made, the struggle that's been to day trade right now, and for me to the demon and the problems that I put myself into, and a lot of it really comes down to jumping into the market prior to when I should be in. That missing, and the crazy thing is that I know not to chase a trade, and not to chase a market, and not to each trade is individual in itself, and I got to be okay with pulling out just a small winning day. Like I was talking to my son today, I've got to be okay with taking singles when singles is the only thing that's on the table at that point. The doubles and the triples aren't really there right now because of the backfilling that's coming into the market. So in the long run, as long as I can control my losing trading days to the degree that I stop at 30, as I've talked about 30 ticks, 35 ticks, if I keep those days inside that limit, then I know that on another day I feel confident that on any given day I can pull out 50 to 60 ticks. Today was a gorgeous day to trade if you're just trying to basically scalp for one P type of moves. Today that was 25 ticks. If you're looking at 25 tick moves today, it could have been a beautiful. And bottom line, what I'm good at is trading one contract. What I've been working behind the scenes is how to add that second contract and how best to take that second contract out. So in other words, how much profit, if I'm going to trade 2, how much profit should I allow for that second trade? And the problem that I ran into in the 50K is I said I started at 3 and 4 contracts because I would get bored of trying to hit the $3,000 mark. I would say, you know what, I'm done with this. I want to go and get knocked out of the combine and move on to the FTP, and then I'll get myself under control. Well, that's not the right methodology to have coming into it. So I have to put constraints on myself, and once the constraints are on and I trust myself per contract, and I have to look at it this way. That's just the way I have to look at it for me personally, because I'm not a very good trader right now when it comes to not having much behind that. So in other words, not having a lot of dollars coming behind my trading right now. So in other words, to be able to take a drawdown, because the drawdown, there's not much difference in a $1,500 drawdown to a $2,000 drawdown. In the end, it's only $500. So so you have to make an extra $1,000 for 500, where you need the same drawdown plus 500. So 1,500 for 2,000. I still believe, honestly, that's the easier target to hit. So At least for me. For you, obviously, if you can trade 50K, go for it. So either one of these two, 30K or 50K at Top Step Trader, are the two best ones to be involved in. If you can trust yourself with the leverage and be a better money manager than I am, then I would tell you to do 50K. But if you are like me and you don't handle leverage very well, or you don't know how to handle it, and it's not like I don't know how, it's that I get involved in where I get down 40 ticks and I think, well, I got 100 ticks here. I can risk up to 1,000. And the problem with that mentality is that I know for a fact that I'll risk beyond that $1,000, and I'll get to the point where I'll just reset this stupid thing. And so, in other words, what I'm doing is I'm feeding Top Step Trader, but I'm not feeding my family. So what I have to end up getting back to is stop being okay with resetting. Stop being okay with oh, I can always reset if I screw up here. So in other words, I've got to hold myself accountable. And that's really, in the long run, it's a good place to be. So hold myself accountable, keep myself at that $500 loss limit that's obviously less than 500. They say your max daily loss. Well, obviously I think that max daily loss shouldn't be a reason to lose an account. But obviously Top Step Trader makes a lot of money on people that do that. They give up the ghost and say, F it. You know, I would say that a lot of us that day trade get into that mentality every so often. We just say, F it. And next thing you know, F it happens, right? it does, you know. So when you put yourself, what's the saying in the Bible? Is, you know, don't put the Lord your God to the test, right? When you put him to the test, man, I'm telling you, it's not a good thing. It's not a good thing most of the time. I'd say 95% of the time, put the Lord to the test, man, you're going to find out that you shouldn't have done that. So as I pick up here, if I want to be a better trader, truly, I need to be ready to trade each day I commit to day trading. Pick a spot I trust with volume. So can you tell when momentum has swayed one way to the other? So I looked at 11. There were some times that I said pick a spot. 11:17 a.m. Central Standard Time, 66.73. So go back and look at 11:17. That's when I got involved at 66.73. So yeah, I can pick a good spot of where I think the market is topping out. And then I found a place that it kind of looked like a bottom at 11:58 a.m. CST at 66.26. Now that one only went up to 51 and then it sold off and kind of went back down. So that, when I was short at 73, and then I saw the long possible at 26 that went up to 51. When you look back at that retracement, it's like, who has the higher of the volumes? So volume will lead the way. If you give yourself enough trust to believe volume will be a precedent of a decent trade. But if you're just jumping in the market ahead of it, more times than not, at least for me, that ends up being a bad scenario for me. So what I have to do is know and recognize that volume leads the way, then start the 1, 2, 3 setup or the fake out or wherever else that I'm using to get involved in a trade. That seems to be the better way to go at it. And it's nothing new, and there's nothing new under the sun as it relates to trading. It's just a matter of applying what you already know and making yourself a better trader from there. And as you can see, I struggle. I was on top of my game from pretty much November through March, into all the way through March, and into about mid-April. And then from mid-April to until about a week or so ago, I allowed Top Step Trader to drive me in a direction, not them personally, but you know, just that it's the vehicle that I've chosen. My poor trading decisions are all based upon me wanting to get back to funded and to pretty much, you know, damn the torpedoes. In other words, you know, I just want to get back so bad that I'm allowing myself to do bad things, and then when you do bad things happen, right? So I have to be more patient now. I think I'm in a better place now because I'm in that summer mentality now. Finally, I really pressed hard to get back to funded before June. Now we're in June, so now I said to myself, well, screw it. If I get back to funded by August, September, so be it. Just be patient, allow it to happen, and I'll probably, since in that kind of mentality, I'll probably put myself back into funded because I'm in a better place now. I've allowed myself to just say, in this case, F it. It's whatever time takes. Allow the time to go off the clock. Quit worrying about things that I have no control over. Take good trade setups and just allow myself to get back to funded. And when I get there, keep that mentality of how hard the struggle was to get back to funded. And I know that I'll get back to funded. And I just know it's a matter of time before I get there. But when I get there, I want to stay. So in the long run, that doesn't kill you, as they say, only makes you stronger. So yeah, I know I'm in simulated environment. It sucks to be in it. I'd rather be making real money and banking it. I'm just not physically there yet. So it is what it is. You know, the daily struggle of a sim trader that can't make real money. And I've made real money, and I've made lots of real money in the past. Day trading continues to be that one arena that just kicks my ass probably about half the year, and I kick its ass for the other half of the year. I'd like to get to the point where I kick it more along the lines of 10 to 12 months. Well, if I'm 10 months of the year, if I'm giving up July and I'm giving up most of December, then I want to kick its ass for 10 months out of the year. So hopefully June 2018, June 1st, 2018 is that redemption day. The day that I turn and I look back at the half year that's almost been passed now. Look at this half year mark that I'm looking at right now. And this is the day that I turned my trading around again. And this time I stop being stupid and allow the market to come to me, you know, allow the market to show me when it's ready to trade, and stop worrying about things that I can't control. If it's going to move a lot in the overnights, then it's okay to say, you know what, it's already moved. If it's not going to retrace and then allow an entry, then it's time to just be okay with letting that day go. That's where I am. That's where I am in my trading. So as I wrap up, don't just jump in. Volume must precede any trade. There must be a catalyst to short the trade. There must be a catalyst to start the trade. You know this in your heart, so trust it to otherwise. You know this in your heart, so trust it. Otherwise, stand aside because it is not your trade. So that's my thoughts for a Friday. It's been a while since I sat down and had a heart-to-heart with you guys on a Friday. I don't know if I did any videos this week. I'm kind of confused with this week. I was a lot of this week I was sick and under the weather. So when I decided to move out of the 50K back to the 30K, I had to obviously ante up some more of my educational money to get there and get back in. Life is tough, man. Life is tough. It's not easy. Trading's not easy. And anybody that tells you that it is, they're, no. Maybe day trading's not easy. It seems to be easy some days, but more days than not, it's like these kind of days. It's like a seesaw yo-yo, and you think, well, it looks like it's going down. Then look at it at another point in the day. It's like, oh, it looks like it's going up, and then it looks like it's going down. Oh no, it looks like it's going up. You know, there's very few really nice trending days in the market. at least recently. I would say since, I don't know, at least 3 months now. It seems like there's not been a lot of really, really nice trending days, or I missed those days, one or the other. So that's it. That's 25 minutes of there's some wisdom in there, and there's some non-wisdom as well. I guess there's some uh, some struggles. So maybe you're there. Maybe you're in that struggling environment. Yeah, I mean, there's days that I'm so confident in what I'm doing that I feel like I'm on top of the world, and then there's other days like the whole month of May that I feel like, what the hell am I even trading for? What have I done to myself in my life? And May is an overall month, is a month that, as far as trading it goes, I look forward to put in the rearview mirror and allow it to fade away and remember the pain of May, but start doing what I know to do. Stop. So in the long run, if I offer one, there's, I guess, two pieces of wisdom that I would offer out to you, the potential trader that's looking at the markets. One, until you can trade one contract successfully, you shouldn't add the second and third and the fourth and the fifth contract. So, and that's just my wisdom to you, because I know that when you're adding the second and third contract, you might add it in a wrong manner. You might add it in a situation that you're doubling up. You're doing the martingale strategy at a market, and martingale in trading, just, yeah, a lot of times it does work out, but when it doesn't work out, you know, when you're adding those contract size, you're going to hit your max daily loss. So in other words, if you're trading, start with one or two, and then you lose that opening trade, and then you're going, okay, I'll just trade three, okay, I'll trade four. You know, what's your limit? So eventually you hit your max daily loss or your max limit of your account, because you're going to lose eventually the martingale strategy. And it's stuff that I know, but until you can confidently know that you can dig yourself out of a hole trading one contract at a time, then you shouldn't be adding any extra leverage to your trading until you know that you can dig yourself. And it might take you a week to have to dig yourself out of a hole. It might take a couple days. It might just take one day. It might take inside the trading day that you're in to dig yourself out of a hole trading one contract. But you've got to be able and be confident that you can dig yourself out of a hole with just trading one. And until you can feel confident with that, then there's no reason to add a second, unless you know a very specific setup that allows you to trade that second contract profitably more times than not, which that in the end is the only way that I would trade two successfully, is that I have a very specific setup on a short that I look for that I can add that second to. It's always preceded by high volume though. And so that's one. And the second component, maybe there's three things I'm thinking of, but that is probably the most important, to know your contract size and what your limit is, and to know that you can successfully trade. You know, let's just leave it at that. Let's leave it at that right there. Until you can successfully and profitably trade just one contract, and if as a futures trader, there's no reason to add the second. Because bad things come of that. So, and that's where I am. Unfortunately, I wished I was a lot better off than where I am, but I've got to confidently know that, and when it comes down to it, there's only one way that you should be adding contract size, and it's hinted towards a Top Step trader, John Hoagland. As bad as I hate listening to some of the Top Step trader stuff, it's also good to listen to it as well. You know, when you add leverage into an account, until you physically have the money to back up that extra contract, there's no reason to add that second. There's no reason to add the third until you can have enough in your account at a profit level, and then, as they say, at the end of the closing day, where are you then? So if you drop below a certain level, then yeah, you got to scale back on your trading. So if you're physically able to trade 3, but you're into closing business, you're under, and for instance, in this case, if you're under the $1,500 mark, you're at the end of close of business, then you got to scale from 3 back down to 2, and that applies, I think, both to the 30 and the 50K. So I would tell you that you want to probably have a bigger cushion than the 1,500 to add that third contract, because I was adding the third contract with a $1,600 level before, and that didn't work out for me. So what I'm going to tell you is that you probably want to be somewhere above the 2,000, 2,500 mark before you add that third contract. So maybe add an extra 1K to all the numbers that you see at Top Step Trader, because that's what I'm doing. So that's my talk. That's my fireside chat, or the summer chat here. And I do apologize if I sound down. I just don't feel very well. My wife was sick like last 2 weeks, and unfortunately I got what she has, and I've been trying to keep my coughing to a minimum. And I didn't want to talk on you know, I didn't want to record myself because I'm been trying to save my voice. And I'm taking medicine right now, and it's obviously it's pretty wore out and tired right now. So that's about it. So when you're not, and I guess let's leave it with that. When you're not feeling good, it's okay to not trade too. So that's about it, I guess. I keep saying that's about it. Now I've stretched this talk to 30 minutes, so it's time to go. It's time. I hope you had a better week than I did. It was a challenging month. I hope you had a better May than I did as well. And if you, I know I'll get back on the horse, and I'll get back, and you know, it just sometimes you got to get kicked a couple times before, at least I do. I got to get kicked to get back up on that horse and then ride it successfully for a long period of time. So it's the pain of losing, and losing poorly sometimes, that allows you to grow even more than where you were previously. And as it's been said, that doesn't kill us, only makes us stronger. So that's where I am in my trading. I hope you're getting better as well. This is Dave Knight here at 123daytrade.com. Thank you for watching. Thanks for being here. I'll see you on the next video I'll put together. Bye for now.